Last webinar, he talked about post ER trades.
Yep.
He's been crushing those as well. Zach, again, just as Zach has like all these tools in his tool belt. So we're going to
Yeah.
bring more of that to you guys tonight. And I think that's the biggest part of why Zach is like so lethal in the markets is he, can, if one's not working or something looks hot, he can just pull a different tool out of his little tool
Yeah.
belt and use whatever he needs. And it makes it all come together very nicely. But before I pass it over, we're getting pretty close here. I'm gonna pass it over to you. But while I am doing that, Bilal, our giveaway guru, who's always on all of our webinars. If you guys don't know Bilal yet, Bilal, turn on your camera and say hello to the people. I saw you had it on for a second. This is
Hey guys.
Bilal. Bilal works on the back end of Stock Dads, does like our giveaways, does some of our text marketing, our email marketing, stuff like that. Um, Google Ads, just a guru, helps us with a ton of stuff. He posted in the chat, as always, a link to the giveaway form. So if you've never been on a Stock Dads webinar, uh, and if you have, you know what I'm about to say, but we only like to reward the people who stick around. We like to reward the people who are present and here and actually investing their time and learning. So if you guys fill out that form right there, it should take 30 seconds, but it lets us know you're here and it gets you entered into the giveaway. It's in the chat. Bilal just posted it. It says Zach's giveaway form. I'll also post it again right there. Fill out that quick form. You guys will be entered to win. We'll do that at the end of the webinar for whoever is brave enough to stick around and learn. We promise it'll be an entertaining and very, very informative webinar. Zach texted me and said, scale 1 to 10, how much sauce did I drop? And I was like, let's go with like a 7 or 8. So like
Yeah.
he's dropping a lot of sauce tonight. It's gonna be really good. Um, and we're gonna be giving away 2 Amazon gift cards for $100 each, and 3 people will win a free month with Stock Dads. If you're already a member, we'll just add credit. If you're not, we'll get you guys in for a month, and it'll be about a 45-minute class or so. And then at the end, we will also have an opportunity for you guys. As always, we always like to bring a little special surprise at the end of webinars. So we will have one of those for you guys as well. So with that said, we got over 150 people in here, chomping at the bit to learn from you, Zach. So
Yep.
again, fill out that form. It's in the chat right there. Bilal just posted it. We will be monitoring that, and then towards the end, if your name's not on that list, you won't be in the giveaway. But with that said, I'm gonna shut up because people are tired of hearing me, and pass it over to you, Zach, and let's start spilling some sauce.
Yeah, for sure. Absolutely, guys. Real quick, someone asked a question. I'm just going to answer that before we get going, which also is a good question for kind of the swing stock kind of approach that I take. And it said, how many swing trades do I typically take in a month, and how many positions do I have open at the same time? So that is a very good question. And as DJ said, it's been a pretty good last couple months. I've just felt really in a nice groove. And so I've been taking more trades than normal. The one thing that I really don't kind of budge with is I try to my best ability to not have over 3 different positions open at one time. If I have an extra position, it's usually because I'm winding it down. Maybe I have a 1 or 2 runners left. But for me, I don't want to overexpose myself to the market. I also, when I enter a trade, I'm not someone saying, this looks good, regardless if it's stocks, options, futures, whatever it is. I want to have as high conviction as possible of entering a trade. So I'm not someone just to toss darts, I'll throw $200 at this, 100 here, 50 there. If I enter a trade, it's because I have utmost confidence, right? Whether it's a trade that I enter on my own, a signal, etc. So I just kind of want to get that out of the way first. But besides that, guys, I wanted to thank you guys for joining. I know we have some people who took my mastermind here. I know we have some Stock Dads members. We have some people who probably have just seen me for the first time the last couple of days. Regardless of who you are, I'm excited to teach you guys. One thing I just wanted to kind of get a general idea from, if you guys can, in the chat. I'm just curious. I know we're here to learn about stocks, but put a 1 in the chat if you either are planning on opening and want to open a stock only portfolio or account, or you already have a stock only account. Put a one in the chat. I just want to get a general consensus of how many people actually do. Okay. So it seems based on the chat movement, we're getting a pretty good amount. All right, cool. So that's good and all. And obviously, especially for the people that are in stock ads, right? I don't like to call us retail traders. Obviously, that's what we are, but we're more educated than the majority, right? But the reality is that not everybody obviously is profitable in the market, right? Most people are what we call market participants, right? Those are people that participate in the market and most of the time, unfortunately, don't actually make money, right? And why is this, right? Because most people who trade don't have the proper tools or mindset, right? Me 2 weeks ago. So, what I want to do today is kind of figure out and kind of define my edge, define your edge, and ask some hypothetical questions, ask some questions that I'm going to answer for you guys. And so, hopefully, after today, we can move forward with a lot of knowledge, right? So, one thing that I always see is, and it does work some of the time, right? People always ask me about these stocks that are hot on social media, right? And right now, we're not even talking about options. We're solely just talking about stock equity, right? Like, oh, what do you think of this chart or this chart? And it really doesn't even matter what the ticker is. They just kind of see all this buzz on social media. They see all this stuff going on and they immediately kind of gravitate to it, right? Like flies on a light. The problem is, if it was as easy as everybody just clicking buy on the same stock, everybody would be millionaires, right? And so, whether you want to believe it or not, you need to have some type of edge, right? And so, you need to ask yourself some questions like, what is this edge, right? I have my edge, and that's clearly defined. I define it pretty much down to the tick. Every single trade, as I mentioned to you guys, I have full confidence in. I don't enter a trade if I'm not, right? So, number one, what makes your trading plan different, right? Even if you're entering a ticker that's not some no-name ticker, what about your plan do you have conviction in? I don't want to hear what Joe Schmo said on social media. I don't want to even hear what one of your friends said. Why do you like the setup, right? And I'm going to define all this into kind of five big categories as we talk about stocks in general. I'm just giving some hypotheticals to start this out, right? And then just the notion of like what will make you a winner, what will put you on top, right? And again, I'm going to define all this stuff. I'm just kind of giving some hypotheticals to start. The biggest thing that I'll say is when you trade, especially with stocks, right? You really have three options. Are you technically driven, meaning technical analysis, candlestick charts, etc.? Are you fundamentally driven, meaning the actual company's fundamentals? You don't even really care about the chart, right? Or are you some type of hybrid of the both, right? When I was first introduced to the stock market, I was solely fundamentally based because I had no idea about technicals, right? Rightfully so, as many people do. Most people are fundamentally driven. They hear Apple, they hear Amazon, they hear good balance sheet, good income, all these things, right? And it drives them to it. Then I kind of shifted to more of an approach of both. I was a little bit fundamentally driven and then I was a little bit technically driven. But then I found out that that kind of didn't work for me. That combination, it didn't really, it actually kind of caused more conflict than, than good, right? So the mixture of the both of them actually was more detrimental to me. And so that's where we are today now, where I'm a technically driven trader only. If there's for some reason a fundamental aspect of something, sure, I'll throw it into the thesis. But everything I do is technically driven. And why this is, and I'm going to show you a bunch of examples in a second, but why this is because in my opinion, and I say this all the time, especially to those in the mastermind, you guys have probably heard me say this a million times. A good looking chart will often have good news, aka good fundamentals that just randomly, appear. Or in a bad looking chart will have, bad fundamentals or bad news, etc. Right? Um, and so I'm going to share my screen here. There we go. So you guys should all be able to see that right there. This was the ticker that we traded in options, but besides the fact here, right? So when you get into, right, so first of all, before we even talk about like what I look for, right? The first thing I said is you got to define your plan. right? And defining a plan isn't as simple as like, oh, this stock looks good, right? We need to break it down into a ton of different aspects, some of which that probably are a little bit more common sense, some of which you're like, oh, maybe I never thought of that before, right? So number one, which we're going to talk about, is entry criteria. And that's probably the most important thing, right? Why are you actually entering the trade? And again, we're going to break that down in a bit here. On top of that, right? And this, all these kind of concepts go hand in hand, right? You have to talk about what is your stop loss, right? What is the stop loss on the trade? So many people, unfortunately, very unfortunate. And if this is you out there, take this as your wake up call, right? So many people have been holding stocks for weeks or months or even years, and they're just holding this dead weight, right? And I talk about a really important concept in a bit here about opportunity cost, which we'll kind of circle back to. But a lot of people, unfortunately, have been holding dead weight stocks for a long time. And they ask the same thing, which just makes me know, unfortunately, again, if this is you, this is a wake up call, that you didn't have a plan going into it. Hey, Zach, I bought XYZ stock. I'm down 40%. What should I do? Where in reality, you should have already had an idea of what to do beforehand. If you're down 40%, that should have been pre-planned. If you're down 40%, I want to hear, you know what? I didn't hold my stop loss, accountable. I held past my stop loss. You know, I don't want to hear I'm just holding and just hoping for the best, right? Because that's not a plan. Those are unfortunately people that are market participants, right? And we want to be the top of the top, right? And so another thing that I personally am a big believer on is that, again, as technically driven traders, we understand that price moves in trends, right? Uptrend, downtrend, or consolidation. We really can only move in one of three ways. Even as parabolic as certain times may seem, price never goes straight up. Okay. And this gets a little bit more in depth when we talk about it in a little bit here. But because price does not move linear, I'm personally a believer that position sizing should also not be linear. There's a term out there called pyramiding, if anyone's heard that. That's kind of where I'm getting at. But basically, the whole idea is, and for those in stock dads, you know that I apply this with my options trades and also sometimes with my stock trades. But I don't usually take my full position right away. I like to what's called scale into it or pyramid into it, where I'm okay adding into a little bit of weakness. I'm okay adding a little bit into strength. And the idea is that you're going to have your base position, add a little bit, maybe up or down, then take some off as it goes up or down. Or maybe if the trade starts to fail, reduce some risk on the way down, right? So not only are you scaling into the position for proper risk management, you're scaling out of the position to lock in gains and secure profit, and also scaling out of the position if the trade starts to go not your way, right? So that's called pyramiding, scaling, whatever you want to call it, right? On top of the the entry criteria, right, which we're going to get into in section 2 here, where we talk about the stop loss, but more importantly, right, is the targets. If you don't have proper targets, you're going to be left in theory holding forever. And what you guys are going to find out very soon when it comes to my talk about opportunity cost is that I believe, as a technically driven swing trader, even if you believe a stock will continue to go up forever, which the odds of that happening obviously is very slim, you're still better off taking entry, exiting, looking to re-enter on pullbacks. And I'll show you an example for those who have either followed or seen the trade that I had in CoreWeave, which was my biggest trade of the year. Um, it was basically the same exact approach as pyramiding with stocks as it did with options, right? And like I said, the price targets are something that's very key because knowing when to sell is almost as important as knowing when to buy. Again, could you have the idea that you want to simply hold forever? Sure. But that's what 90+% of the population does. And again, we want to be the top of the top, right? Even in your long-term accounts, you want to squeeze the most out of these moves, right? Even let's just say we're talking about this trade right here in snow, right? Before we even get into anything. Right here on this day, snow was around 192 and it ran up to about 203. It then was in a range from around 200 to 214. So in theory, we could have bought in here, let's say at 203, sold it at 214, and then it went sideways for a couple weeks where you would have had many opportunities, right? And you could have even re-added it around 205, 206 before that move back up. So now you're taking an entry, exiting, taking an entry and exiting, where in theory, you actually would have made more than if you just had your initial entry and then just held it the entire way. I call this squeezing the most out of a setup, squeezing the most out of a position. And again, for those in the Discord, you guys know when I find high quality charts, I like to get in, I like to get out, look for re-entries, and I like to stick to those charts, right? So before we move on to number two, I'll kind of show you a good example of that with this stock. This stock here, CoreWeave, was a somewhat new recent IPO when I first started trading it. And I did think it was going to have a big move, but the market doesn't care what you think. So what I had to do was constantly every single day have proper risk management. So in this case, yes, I did trade options, but it would have been the same exact idea and approach trading shares, right? When I got interested in CoreWeave, we were way down here. We had the first bullish daily flip, as you guys can see right here by this green arrow. This signifies for me that we're in a bullish trend based on the EMAs, which I'm a big user and believer of. And I basically was buying and selling. I was basically buying on pullbacks, selling on impulses, continually buying on pullbacks, etc. Pretty much from $50 all the way up here to around $130. I didn't really catch any entry above that, but I also at this point was pretty happy. But you guys can see, right? Even with this pretty parabolic move, if which I'm not going to do right now, but if you were to break down every single candle on the daily chart here, there were multiple opportunities to get re-entry, right? Off the daily 8 EMA, off of these hourly EMAs. One thing that I haven't even talked about, which I'm not going to during this time just because I don't have enough time, right? I wish I did have enough time. Talking about Fibonacci, and then also if we go back to Snow, talking about my hourly level system, right? I use an hourly level system. This is where I get my targets from, right? And so today I said that the target for today on Snow was 224. We're technically 223.9. What do we do? Basically hit that and start to reject a bit. And so now what I would do as someone who's interested in Snow, right? And this could be applicable as soon as tomorrow, is I would say, okay, we could take our profit here. We can look for either a retracement or we can look for a break of the previous high. A break of the previous high would then show me, as long as we get confirmation that we're breaking the market structure and we're good to go higher, right? So enough about kind of just the little details here. There's two more points I want to get into before I start defining what I actually look for. Number one, which is something that, in my opinion, people don't really utilize as much as they should, is something called either the ATR or ADR. Let me know in the chat, guys. Has anyone ever heard of ADR or ATR in the chat? Let me know either. You use it? Some people have. No. Heard of it? No. Okay, so a little bit of both, right? I've heard of it, don't use it. That's kind of what the general consensus is. You got some people who know what it is, you have some people who don't know what it is, and you have some people maybe don't know what it is, but they maybe should use it, right? So all this really means ATR, I usually use a daily chart, so I say ADR, but ATR means the average trading range, or, for ADR, it's the average daily range. And so in simplest form, all that is how much can a stock typically move per day? There are indicators out there that give you out and spit you out a formula. I just kind of go and just do it by hand, where, we can just use this data set here again on Snow. Again, nothing fancy here. There's no complex formula or nothing. All we're doing is saying, okay, the low of this day was 219. The high of this day was 224.6. That was roughly $5.50. Let's go back to the next day. Low was 2073. High was 214 and change. That was about 7 plus. Day before that, 211 to 215, about 5.5. And then you can see some smaller days, 2098 to 212.5, about $3, right? Roughly. So we could probably say for Snow, a smaller average daily range is between $3 and $4, and a larger average daily range can be, $5.50 to $7.50. And that's important, right? Because we want to know how much can our stock move? How much can it physically move per day? Why? Because we don't want to have false expectations. There is a time and place, which I, again, don't have time to talk about today, to look for ADR or ATR expansion. right? When we're breaking out of ranges, when we have post earnings trades, which I covered in the last webinar. Again, we don't have time for that, but there are times to look for that. And so to understand how much a stock can move, it gives you the idea of kind of expectations, right? And then most importantly is what I call opportunity costs, right? So for people that understand or have ever heard of opportunity cost, it's basically like the idea if you do one thing, how would it impact another? And in trading in simplest form, to me, what this looks like is unless you're a hedge fund out there when you got, eight, nine figures of capital, even more at times, right? Majority of the people that are in this space only have limited bullets, right? Limited ammo, limited buying power. So because of that, you have to use it wisely. It goes two ways, right? You don't want to go all in on something because then you could be stuck. And you don't want to spread yourself out too thin. Why? Because if you spread yourself out too thin, you may not make as impactful of moves if the trades go in your favor. So you want to have conviction in your setups, which I'm going to hopefully show you guys, and you want to be able to size accordingly, but still responsibly, right? And so opportunity cost basically says to me, so let me back up one second. For me, like I said before, I am somebody that likes to take advantage of moves, right? I like to take advantage and I like to actively trade. Some people don't and some people can't, but it's very, very simple and only takes minimal effort. I am somebody that would rather sell a stock if I can make a 10% gain in 2 to 3 days, barring that's in my plan and that was my target, than let's say, I don't have an example off the top of my head, but let's say try to hold a stock for a year plus and make 25 to 30% gains. Yes, it's a very good hands-off approach if you want, just to kind of sit back and let it do its thing. But within that, 25 to 30% gain, the reality is the stock is going to make some multitude of moves that look something like that. So yes, while if you were to simply buy here and sell here, you'd make 25%. But you could have also made, 10% here, bought here, made 7%, bought here, made 8%, bought here, right? And it sounds like a lot of work, but you have to choose, you have to ask yourself, right, the question, do I want to actively trade and put in a little bit of effort that really doesn't require much time and make more money, or sit back and potentially make less, right? Obviously, there are situations where actively trading can go south, but at the end of the day, you could have held from here. And then let's just say this doesn't happen, right? And let's just say this happens instead. You would have had multiple opportunities to exit the trade for gains. And now you're left with nothing. So that's why I'm a big believer of taking the gains and looking to reevaluate. I also am a believer of making sure you're holding to your targets and not selling too soon. But once the targets are hit, understanding that pullbacks will happen, right? Some trades that I've taken, some tickers that I've traded recently this year, it seems like there has never been pullbacks, right? CRWV, for example, crazy, crazy move, right? From around that $50 area up to 180. But even then, there were pullbacks. There were pullbacks. There were many opportunities. As you guys know, kind of the first big one that I called this year, one of my first big winners of the year, Sezzle, right? As crazy as this looked, right? I still have my old chart here from this breakout. Around $55, there were still many opportunities to dip by. And again, it may seem crazy watching it run from 55 to 110 and double, but the mindset that I'm going to try to get you in after today is that yes, we don't want to chase names, but once we kind of build our system and our boundaries, we can actually take advantage of these strong names rather than look at the weak names, which I'm going to get to in just a second, right? Because oftentimes looking at these weak names does us no good, right? Does us no good. So, that was a little bit about opportunity costs. I'm going to circle back to opportunity costs once I start kind of giving you guys a little bit of the sauce here as to kind of what I look for in my trades, right?
Hey Zach, before you do that, real
Yeah.
quick, sorry to interrupt, but
No,
just
go.
want to remind everybody, check the chat. There is a link to the giveaway form. You must be on that form to be eligible for the giveaways at the end of our session. So make sure you're on there. It looks like most of you guys are on there, but we don't have a one-to-one matchup for how many people are in here and how many people are on that list. So if you guys want to be eligible, fill out that form. Thanks, Zach. Back to you.
You got it. You got it. Appreciate it. Yeah, guys, definitely fill out that form. Um, anyway, so we're going to talk about now my criteria and we're going to break it down, right? So section one there, we're kind of just figuring out the plan. And those are questions that, regardless of what you take from today, you can ask yourself every single day when you enter your trades. Because again, everybody trades differently. That's how the market moves. Because you may think, no, that's not a buy, and I think that's a buy. And you may think that's a sell, and vice versa. That's how the market physically moves. I'm not saying my strategy is the best strategy out there, but I'm very, very impartial to it. Um, but anyway, so we're going to get into this here. And someone made some type of comment about the white lines. Yes, the white lines, the hourly levels, those are very, very key to my system. But again, I don't have enough time to talk about those today. I'm going to give you guys the bigger picture blueprint here, stuff that you can kind of use and apply as soon as, today or tomorrow, right? So just for now, I'm going to get rid of these lines. So one thing that I'm looking for, right? And this goes with really with anything, but especially when looking for stocks. I'm a user and a believer of the EMAs. Even if you have no idea what they do, how to use them, that doesn't really matter. All you need to do is know one simple thing. I use the 8 and the 20. Some people use the 9 and the 29 and 21, 8 and 21. Doesn't matter. People ask me that all the time. The yellow line here is the 8 moving average. The blue line here is a 20 moving average. For me, my criteria for entering a long side position is very, very simple. I want to see at least two of the three, if not three of the three of the higher time frame the important time frames in my favor. So for me, that's the daily, that's the weekly, and that's the monthly chart. So for me, if I'm looking to take a long position, that's the first thing I do. If anyone's ever been on one of my market scans, the first thing I do when you guys give me a ticker is I look at the monthly chart, I look at the weekly chart, I look at the daily chart. That's called top-down analysis, right? We're not looking at any type of, financial statements or anything for the analysis. It's simply technically driven, right? So that's the first thing I do is kind of check those boxes. Are we in a, if I'm looking to go long, are we in an uptrend? It's that simple for me. So looking at Sezzle here, right? Again, even if you know nothing about technical analysis, all you need to do is know this. The 8 and the 20 EMA, yellow and blue. The yellow needs to be on top of the blue in simplest form. So looking at the daily chart here, yellow on top of the blue. Looking at the weekly chart here, yellow on top of the blue. Looking at the monthly chart, we don't really have as much data for this, right? But still, yellow on top of the blue. So for me, and I actually made a video about Sezzle when it was literally, I think, a week ago when it was at like 140, somewhere over here. And I said, stocks that I'm looking to buy the dip on every single day. And again, these are not stocks that I'm physically going to buy the dip on every day, but it's just the idea, the concept that this stock fits my criteria where I'm looking to buy every and all dips. Until when, you may ask, right? Which is a good question because the hardest thing to do, I will say, is trade when we are at all-time highs. Because again, there's really nothing for us there, right? We can use Fibonacci's, we can use Fib extensions, we can use measured moves. There are ways to do this, average daily range. I'm not going to get into that right now. But it fits the criteria for me. And so until either the daily, the weekly, or the monthly flips into a downtrend, this will be on buy the dip notice until, a further date. And as you can see, quite literally, since their earnings report in May, it has been on buy the dip since then, right? And so again, there's many examples like this. This is just an exaggerated example, right? We could talk about, CrowdStrike, for example. This is another super strong stock, cybersecurity, right? If you could see here, daily uptrend, right? And again, we're nearing the all-time highs. Weekly uptrend, monthly uptrend, right? When you zoom out like this, it looks so simple. It looks so clean, right? And like, let's just say you would have bought it right here at 165, right? And this is kind of a more exaggerated version of what I was talking about before. This was around call 165, right? In October 2023. You could have held it until July 2024, and you would have been up over 100%. And then it would have came all the way down to $200, where then you would have only been up 20%. So there's no problem still continuing to hold. But my point here, this is a good visual example that's kind of just ad-libbed here on the fly of seeing why that holding forever isn't necessarily the best move. Again, is it the easiest move for people who don't have the skills of technical analysis? Absolutely. And that's why people simply do buy and hold forever. But you're able to take advantage of these moves in the market. And again, this is an exaggerated version of that, right? But you have names like Crowd, right? You have names like Meta, these names that are just in these monthly, weekly, daily, uptrends where all you're looking to do for the most part is making sure that these time frames are aligned and you're looking for dip buys, right? I'm going to get into the kind of the criteria for the dip buy in a second, right? The kind of general big picture idea here. But before I did that, I wanted to show you guys some examples of stocks that you guys maybe own, you guys maybe have heard of, someone maybe has bought them, right? So again, if these are any of your tickers, I'm not saying sell. I'm not saying get rid of them just because they're on my list, but just based on my criteria, these are names that I will not be buying and probably not be buying anytime soon. Number one, Nike, right? So inversely, we just talked about what are some stocks that I want to look to buy, right? Stocks that are in a daily, weekly, monthly uptrend for the most part, at the very least, two of the three. So now what do you do with the names that aren't? And again, you have to decide, are you a technically driven trader or a fundamentally driven trader? Maybe there are some fundamentals for whatever the reasoning being that you're going to buy Nike. But just being truthful and transparent, all the fundamental warriors have been telling me to buy Nike for years. And if you guys look, they said, oh my God, Nike under triple digits. You'll never see this again in your lifetime. I mean, maybe at some point it will bounce and we'll never see it again. But people have been saying this for over a year to me. People, I remember, clown me, because I said in August of 2024, I wasn't interested in buying Nike. Sure. Did it go from 70 to 85? Absolutely. Stocks that are weak are still going to bounce. But guess what? Look where we're at now. We got to a low of 53. And again, could you say that 70 to 85 is great? Sure. But how many of those people do you think actually sold at 85? And again, there is a time and place to buy these weak stocks and take advantage of, market structure, taking advantage of the impulses looking to buy on the pullbacks, right? But how many people do you think actually sold at the dead top and bought at the dead bottom, right? It's a much easier and more fluid trade if the higher time frames are in alignment. Hold on one second, guys. So as you can see right here, this daily is trying to flip back into a short-term uptrend, which it's not really. But bigger picture, the weekly has actually been in a weekly downtrend technically since January 2024. And if you look at the monthly chart, we've actually been in a monthly downtrend since June of 2022. So I will say to somebody, hey, I am not interested in longing this name until we have at least two of the three in our favor, and most likely three of the three, meaning the daily, the weekly, and the monthly. Why? Because of the whole overarching idea of opportunity cost. Can Nike go up? Yes. Will it go up at some point? Most likely. But you want to, in my opinion, use your money as wisely as possible. A really, really good example. The first webinar I ever did for Stock Dads, I talked about Alibaba. If it will load. Boom, here we go. And I said, people were asking me about this, and I said, I'm not touching Alibaba until the monthly chart flips. Sure enough, look right here. In what was it? February? January? January, what did we get? We got our first monthly upside bullish flip, meaning for the first time since 2021. So about 4 years, we were in a downtrend on the monthly chart. We flipped to the upside. What immediately happens afterwards? We go from 97 up to 145 in 1 month. So you could have bought BABA here, which in my opinion, I thought this was the low. I remember I was trading during this time. You could have bought BABA literally March of 2022 and held over 3 years and you would have made gains. Or you could have just waited, even if you didn't buy 85 and you bought it 100. You would have made 45% in 1 month rather than someone, let's call, making 90% in 3 years. So what sounds better, 45% in 1 month or 90% in 3.5 years? I'll take the 45% in 1 month every single time. Take it and move on to the next setup, right? I'm hoping he's not on here, but I had a buddy of mine who I played baseball with who bought BABA at this time. And I told him, bro, I said in 2023, 24, I'm not buying until the monthly flips. He held. He made money. He made money.
Ready?
But I bought in here and made equally as much percentage as he did, pretty much. Um, but I'll show you a couple more, bad examples before we kind of get into the good stuff here. Just some tickers that I'm not interested in based on the higher time frames, right? This has nothing to do with the fundamentals. I could care less about the fundamentals, right? Moderna, this has been in a monthly downtrend since June 2022. Some people see these type of charts, these big move ups, these slow and big move down, and see, oh, it could just get from 22 back to here. No, this process takes time and it's not a high probability shot, right? So, some people maybe are bullish on Moderna for whatever the reason is. Maybe it will go up, but it's been dead money for a while, right? Next up is Walmart. Oops, sorry, not Walmart. Walgreens, excuse me. Walgreens. And this actually is another good example here, right? Because this stock has actually been in a monthly downtrend technically since 2022, but it got really crushed once it kind of broke under these COVID lows, right? Down towards like the $30 area in 2023. And people kept saying, oh, it can't go lower, it can't go lower, it can't go. And then finally it does. And yes, look, it did bounce from $8 to like $12. But for the amount of times that you could have potentially tried to bottom pick here, it just wouldn't have made sense, right? So as soon as you look at a chart and you see these higher time frames against you, it's like if you go in the ocean and there's a tide going against you. It's hard to fight the waves. It's hard to fight the tide, right? So you just want to kind of hold off and wait till the coast is clear, wait till the tide's in your favor, Obviously, we can talk about shorting, but that's not the point of this, right? Another one, again, nothing to do with, sorry, nothing to do with the fundamentals at all. They could have the best fundamentals in the world is Enphase. This funny story was actually one of the first stocks that I ever bought in 2018. I bought it around $8 and I sold it at around 30. And I thought, wow, I just made so much. I think at the time I made like $1,300 and I think it was just first year of college or something like that. And I was like, holy crap, this is great. I just made so much money in like a couple months. And then I watched it go from $30 up to, whatever it eventually did. And even during this run up during COVID, when it went to like 200, I'm like, wow, I need to learn more about this whole stock thing, right? And lastly, here, this is another one that's also a little bit controversial is Disney, right? This is one that's another kind of like Nike-esque name where it's kind of like too big to be bad, right? But in reality, right? Look at this. Oh, I already have it drawn. You see that? Disney has really just been range bound for like 3+ years. So people could just be holding and buying, sure, but there's so many better opportunities out there, right? There's so many better opportunities. While the higher time frames may be in our favor, this name has been consolidating a lot. And so this actually segues really perfectly into kind of my next kind of criteria here as to things that I look for, right? And this is kind of unironic. I didn't mean for Disney to be the last one, actually. But one of the biggest things that I look for and what I say is consolidation is your friend. You want to take advantage of consolidation. You want to look for consolidation, which is just range bound, choppy action, right? You can clearly see here, you don't have to know anything about trading. You can see that this has been going sideways, right? But the key thing is you want to stay out of consolidation, right? And we talked about that a little bit with Baba, right? Alibaba, in theory, went sideways for 3 years until the monthly finally flipped to the upside. And then you can immediately have taken advantage of that, right? So there's consolidation comes in many different shapes. And I'm going to talk about that a little bit here. Things that we're going to look for, right? Can be as small as daily consolidation or potentially weekly consolidation. In this case, it's monthly, or you could even say yearly consolidation. We've been going sideways for years, right? And so, a couple examples that I want to show you, right? One example is a little bit more applicable because we just took a trade in it last week. And again, some of these examples may be with options, but again, very applicable for what you'd be looking for stocks as well. Grail. For those in the Discord, you guys know we cashed out on this name here. Okay. And so again, try to just like ignore the lines, even though they are crucial, right? So if you look at this chart, okay, this chart right here, as you can see, kind of rejected this zone up here, rejected this zone, rejected this zone, rejected this zone. On top of that, we were within the previous month's range. So for me, I wanted to see confirmation above this kind of $44, $45 area. And then for me, my next target would be that 49.6. So if you look at this daily chart, right, we were basically going sideways, going sideways, going sideways, and we caught this huge pop. I'm not going to get into the details of this specific trade, but we basically waited for the break, waited for a retest, and took the entry there. And again, we took options, but let's just say we bought shares at $45, right? In one day, you would have made over 10% in one day with shares. And again, this name was basically going sideways for weeks, but just kind of the idea of knowing when to strike, knowing when to be patient, and kind of knowing when to attack, essentially, right? And so that kind of already happened. I'm going to show you guys a ticker that I'm watching now that, it's kind of yet to be seen if it'll set up, but kind of has that same idea. So if you look here, kind of that weekly consolidation finally breaking out, right? We went sideways for a bunch of weeks, especially in this region here. Let me just get rid of these lines, right? A lot of weekly consolidation there, and then we broke out. CPNG. This is a really good example. This name, again, no two setups will look exactly the same, but they're going to have similar characteristics as what you're going to look for, right? And CPNG is a little bit of a slower mover, so you have to understand that mentally. But what we can take advantage of this from this is when and if it does set up and break, we can look for that first immediate move and ride that up. So we're not going to be wasting any time in the consolidation. Once the consolidation breaks and confirms, that's our time to strike, right? So if you look at this chart, it's basically been in this range for about 3+ years, right? If you kind of were to draw something like this. Now we're finally breaking this range and now we're going sideways. So this to me is the confirmation. Now all that we're trying to do is kind of in theory think of stored up energy just trying to break higher, right? We've had all the chances in the world with this crazy market to dip and fade, right? But we broke through these multi-year base highs and now consolidating above it. So just using, visuals, we could say that we might have a little bit of resistance above 31, but then above that, we're pretty much wide open. But even a move from call it 29 to 31 would be pretty solid as well on equity, right? And so this is one that I'm watching that you guys can keep on watch as well with me moving forward. Again, it's not quite setting up yet, but definitely one to keep on watch. So we kind of talked about these multi-month, multi-year bases that we're looking for, right? Because again, we don't need to hold for the multiple months or multiple years, but just in history, we've had all this kind of data built up that's now able for us to use. So another absolutely bomb trade that we took this year was an APLD. Kind of the same deal, right? This multi-year base. What I was looking for was a break above the previous high. So what I took entry was actually right in here. We took entries on shares at 10.3. So another form of consolidation that we like to call is, if you guys are familiar with me, especially in the Discord, it's a setup called the 1-2-3. Very simple. All it talks about is some type of impulsive move, some type of pause or rest, and then some type of impulsive move again. So let me just do this real quick. What I'm going to do here is I'm going to just show you the market replay on how this looked when I entered, just so you guys get an exact kind of visual. So this is how it looked. We were breaking above this key level. We had our highest daily close in about 3 months at that time. So we got this nice impulsive move, this kind of somewhat of a hammer candle, kind of resting. I don't use volume, but people like volume, lower volume. There you go. And I was looking for that continuation to the upside, knowing that if we were to break out of this multi-year range, a couple things should happen. One, this move should be violent. Two, this move should be right away. And three, this move should hit our target with pretty much no problem. So we took entry, I believe the entry was around like 10.1 or 10.2. And the first big target was here at 14.6. So now if we just get out of the replay mode, we can see that that happened pretty much effortlessly. The next day, we went from around 10.1, 10.2 up to 13.3. So even if that was it, one day, 30% profit. And again, you could say, oh, you got lucky. Oh, it was just one ticker. This is what we do. This is how we build our system. This is how we build our watch list and our entry criteria. We take advantage of moves like this. Could we have held and bought at any of these points ever? Sure. Coulda, woulda, shoulda, they say, are the three best traders, right? Coulda, woulda, and shoulda. But we can only do what we can replicate every single day. That's what I always say to everybody. All you can do as a trader is follow your plan and take entries that you could take every single day. Okay. And sure enough, we did hit our target there at 14.6. And at this point, I sold most of my position. I ended up selling the rest around $12 as we failed to hold this area. And now we're going to potentially look for a reentry. Right. And so one of the things that we're going to look for when talking about these EMAs, right, and I can't really get into too much detail just yet, is the concept that we said before that even if we think a stock, like even if we think APLD is going to be a $50 stock in a year, it doesn't mean we're going to go straight up. Market structure is made of different waves, right? So let's just say we could start here at the low and we come up here. We could easily pull back here and make a higher low before making new highs. There's nothing that says that we can't, right? Market structure, which is the most important part of trading, says that we still can, right? And quite frankly, and maybe this is spilling too much sauce, I'm looking for a reentry here. And some of this may not make sense to you as to why just yet, but because we're retesting this key level, these key levels here, we're hanging on to the daily 20 EMA, daily buy setup, meaning that we put in some type of potential low and some type of follow through. So now if this fails, we can easily just stop out under these lows because why? Market structure at that point would be broken. And most importantly for me, we're bouncing off that weekly 8 EMA and essentially retesting this huge breakout point. So this for me is something that I'm really excited to try to look back into, whether it's stocks, options, leaps, anything, right? This is definitely one that's on the radar. But also a really good example on it doesn't matter if you think that this stock is a $50 stock 1 year from now, it's not going to go straight up. Even the stocks that go parabolic will give you multiple entries and multiple opportunities. Okay. And so, for me, higher time frame EMA retests, whether it's a daily, weekly, monthly. Obviously, monthly happens the least, weekly happens less than that, and the daily will happen more frequently. Obviously, you go down to the smaller time frames and take the entry based on that criteria, right? But we unfortunately, like I said, don't have enough time for all of that.
Hey,
Simple things that,
real quick,
yeah,
let me just real quick interrupt. Sorry.
go ahead.
We got over 200 people in here. And we don't have 200 people on the giveaway list. So if you guys are not on the giveaway list, I just popped it in the chat again. Click on that link to be entered to win the giveaway. You must be on that list before we do the giveaways in order to be eligible. Put that in the link one more time, or in the chat one more time. Just wanted to remind you guys. Thanks.
There you go. I just read a couple questions there, guys. Again, some of what I'm going to talk about today is kind of like my system, my secret sauce, and I am going to spill some of it, but some of it, even if I wanted to, I just don't have enough time, right? But in simplest form, one thing that, and I was going to get to this actually next, which I saw in the chat, is someone said, what does the flip mean? The flip simply means is when the trend flips, when the EMAs flip. For me, a trend flips on two different things. One, based on market structure, and two, based on the EMAs. Okay. When both those things happen, that's what I look for. So in this case here, why I took the entry on APLD is because I liked this daily pause bar and the weekly, as you can see right here, was flipping. So going into my next point here, which someone just asked about, I look for opportunities where the chart is going to flip, whether it's a daily, weekly, or monthly. Again, if all the time frames are not already in alignment, I'm looking for spots just like this. What's a stock that we just traded that has the same exact criteria? Again, these are not kind of shocking things. This is not luck, right? Snow. Snow has been, I have not traded snow prior to like recently in a long, long time. Why? Snow did something it has never actually done this last month. So if we're just breaking it down, right? If you're looking at snow, look at that daily chart. Obviously, we captured this. That was great, right? We banked on that. Irrelevant. Daily chart in an uptrend. Weekly chart in an uptrend. Now look at the monthly chart. The monthly chart here, as you can see, this green arrow signifies the 8 and the 20 flipping, meaning the 8 is now on the top, the yellow's on top, the blue's on the bottom, right? In simplest form. And if you look back in Snow's history, it actually, by definition, has never technically been in a monthly uptrend by my definition. We kind of popped up here during the IPO, dipped, made a lower high, and then kind of fell, right, to new lows. And as you can see, what did we do? Excuse all the lines. But we basically went sideways for years. So again, let's just say we're not even trading options. All we're interested in is in shares. You're waiting for that monthly candle and say, okay, I'm going to just wait for this monthly candle to flip to the upside. You buy in there at 205, we're, within 20 something trading days, not even 20 something trading days, we're at 225, right? So we're approaching 10% profit on something within a month, right? Again, could we see bigger gains? Absolutely, right? This name just happened to go sideways for a bit longer, right? And so again, we're talking about big picture here. You could have had a better entry, which we did for options, right? I mean, you could have bought at 209, 210 and got out today for like 6%, 7% profit in a day. But even if you're just taking it one step back and just solely focusing on the higher time frames, buying there at 205 and now we're at 225 within less than, 15 trading days or so. Instead of the people who have been trying to play the range game, play this chop game for forever, right? And so, that's something that we're looking for, consolidation on all kind of fronts. Another trade that I missed, which again could be used exactly with shares, was in Tesla, right? So you may say, oh, Tesla doesn't give us an entry. I want to see Tesla back at 225. I missed it. Well, like, sure. Could you buy there and hold forever? Sure. But there are plenty of opportunities to actively trade shares. Look at this daily chart. This daily chart here. I'm going to actually just delete all these for a second. This daily chart here is going sideways for a couple weeks or maybe a week plus, right? And then on top of that, look at this weekly chart. So one thing that I said, if you guys are not familiar with what inside, means, an inside daily, inside weekly, inside monthly candle, all that means is that one candle is inside the previous. What that signifies is consolidation, because that signifies range and that we cannot break out of a previous range or data set. And so for me, the more consolidation, the more range that we have, aka inside candles, the more explosive of a move that could be coming. Inside daily candles, meaning a stock. I can just show you an example. Or maybe I can't. Actually, I can show you one here. Perfect example. Look right here, inside daily chart. So what do we have right here on Tesla? And again, I'm showing you just good examples. It doesn't always play out like that. So just understand. Clean little bull flag consolidation right to the daily 8 EMA. If we were to go back in time and just see how this looked, right? You're like, you know what? Nice daily chart, nice consolidation right at the daily 8 EMA. Inside daily candle, as you guys can see right here, this candle was fully inside the previous candle. This would be a great opportunity to take some shares. I'm going to get in at 340, let's say, right? Exit. Next day hit 362. So we went up about 23 bucks, call it. So whatever that is percentage wise, 6-7% in a day. So yeah, are you mad that you missed Tesla at 225 and now it's 300? Sure. But you could have made 6-7% on a mega cap tech stock in a day. And then you could have exited, you could have held some, maybe you would have stopped out some depending on the plan. But the whole idea here is to just show you that it's not as simple as, or not as black and white as, oh, I need to buy long term, I need to buy at X price. No, you can actively trade shares if you know what to look for. And so if you look right here, I don't want to show too many examples, but weekly inside candle, as you can see, this green candle was within the previous red, and then this one was within the previous green. And then sure enough, what did we get the first day this week? We gapped up from 322 to 327. Let's say you only caught the entry at 328. We went all the way to 357, almost 10% in a day. Can't get too much better than that, right? So again, I talked about kind of the different examples, inside daily, inside weekly, inside monthly, all these kind of, 1, 2, 3 patterns. The biggest thing that I'm trying to show you is that we want to take advantage of consolidation. We want to have our eyes trained to look for consolidation in these many different shapes, right? But we want to do our best to stay out of consolidation. But also that's what shares are for. We're not going to be perfect every single time. I'm showing you a lot of pretty solid entries here. We're not going to be perfect with our entries, right? But by looking for these type of setups, right? Another one that we took somewhat recently in the chat, we took shares of CEP. Why did we take this? I took it right here inside daily candle. We had that nice follow through. And then the next day we absolutely exploded. But why did I take that? Is because we were retracing to the higher time frame EMAs, daily inside bar. And at the time as well, it was a weekly inside bar. So I knew once these highs got taken out, it was an easy hold. The highs got taken out next day. And so we entered around 30, I think it was $34. The next day, we were already up almost 10%. The day after that, we got to $47. Obviously, these are great examples. Doesn't happen all the time as easy as that, but just to show you the possibilities are out there, right? A couple other things I did want to talk about is just the idea of why to take shares over options. A couple things, right? You kind of have to determine based on what I taught you guys earlier, or just mentioned again, the average trading range or the average daily range. So everybody loves this stock, right? It seems to be like the social media sweetheart, SoFi, right? Everyone loves this. And honestly, this is not a bad chart. That's not the point of what I'm trying to say here. The point of what I'm trying to say here is that SoFi, despite being a cheaper ticker, which cheaper tickers still can move, right? It doesn't move much. It's not a big mover, meaning that this is a slower mover, right? So from all the way down here, it went from $8, right? And this is a huge move up to 16. So it went up about 100%. But if you look intraday, the moves aren't that big. Intraday, the widest move sometimes can be 80 cents, a dollar. So this is a good example of you can more so actively trade this without having to worry about big drawdowns. Because yes, is a dollar move on a 15-cent stock big? Yeah, but that's not talking about, from A to B. That's talking about from the top to the bottom, right? And so if a stock's a little bit of a slower mover and you're looking for bigger targets, then yes, you're going to look for shares over options because you don't want the options to get time decay, right? DJ said from square one, the first thing, in the webinar here is that he stays away because he doesn't like time decay, doesn't like the theta, which I don't blame him, right? If you're not good with kind of managing that timing, it gets tough, right? And then like I said before, is I'm someone that likes to take advantage of these larger moves, these potential kind of expanded ranges. So, we're looking at like the stocks that we mentioned before, like APLD, right? When we're getting these areas of breakout, we're looking for that expanded move. Another big move that we caught, which I actually sold short, is I entered IonQ right around here from this like kind of daily sort of consolidation in here around, I think my entry is about 34.50, somewhere in here. And then this thing, it pains me to still see it, but we went from 34 change all the way up to almost 50 in one day. And I sold it, I think, at 39.5, or I think it was just shy of $40. And then it went another $10 from there. Again, you're not going to ever catch the dead bottom, dead top, as I said. You just have to catch the bulk of the move and be able to do things repeatably every single time, right? Um, and that's kind of the biggest kind of thing that I want to say about this is, you have two choices, right? I'm kind of giving you my idea and my choice of being a more active trader to understand that there's a lot of opportunity out there if you open up your mind to not needing to buy at one certain price and needing to hold it forever. Open your mind and put a little bit more effort in, right? And again, these things don't take time. Just say, okay, if we come down to here, I'll look for a little swing trade from here to here. I'll take my gains, reevaluate, right? And now look, we went from 34 all the way up to 50 and then came all the way down to 35.6. So you could have, in theory, rebought there, rode it back up to 44, right? And I'm making it seem easier than it is, of course. But we don't have any of the variables. One, you don't fully know my system. Two, you don't know my levels. We don't have these other impactful things. But it's more so, it's not me trying to teach you the full system right now. It's more so showing you the big picture ideas and the possibilities that are out there, right? Another thing too, as well, just in general, is that if let's just say you do have a more volatile mover, right? Like an APLD, let's just say you think it can make a big move, right? But this is also a key breakout spot, so maybe it does fail, right? Not all trades work. If a stock requires, or just a setup requires a larger stop, right? A 20% stop on stock equity is what? 20%. But a 20% stop on the stock equity on options is most likely going to be more than 20%. So you may say, hey, these options are cheap enough, or these stocks are cheap enough to hold, and I don't really need the options, right? So that's definitely something to keep to keep into consideration as well. How wide your stop is based on percentages, even if the R to R makes sense, because here it did. I was risking about $2 to make my first target was like 4 plus, so it was a 2-to-1 R to R for the first target. But still, it was a bit wide for me. I did actually take some options as well. I found one that made sense, but the majority of my position for this was in stock equity. And then the last thing that I want to talk about just really quickly here, is covered calls, right? I'm not an expert at these, but I do know enough to show you guys a little bit about them. So basically, what these are is it's a kind of another way to essentially make money passively with equity, right? And so I'll give you the basic requirements, what you're needed to have. One, in simplest, a margin account. Margin account to actually execute this because you need to sell an option, which is like level 3 or whatever it is. Um, what also you need is 100 shares of a stock. And so essentially what you're doing is you're selling an option, right? So normally a lot of people here probably are familiar with buying options. So let's just say you bought a call and it would cost you $50. This is essentially selling that. So you're going to be selling it to somebody. And what you're banking on is that a certain stock will not surpass a certain amount. So something that I did with APLD, when I initially bought, I bought 100, I bought 600 shares, I think. It was about $6,000 or maybe 500 shares, something like that. And I sold 5 or 6 covered calls. And what that basically did was I said, okay, is as long as we don't get above $16 by this week, I will retain the premium that I sold. So each of those calls costed about, I think it was about $10. And so it may not seem like much, but for me, it was one of two options, right? It's either I made the money on those covered calls, so it would be 6 times $10, so it was $60. So essentially a free $60. Or if I was wrong and I had to actually take a quote loss on this, meaning that it was above $16, I don't actually take a loss. All I would be forced to do is sell the shares at the current strike. So I would have to sell my shares at $16. But if we're bought in around 10, that's a 60% gain. So really what I aim to do with these covered calls is look to target something that has enough premium for me where it makes somewhat sense, but also look for something that one is maybe unrealistic in a certain time frame, and two is a price that I'm okay selling at if it does get to there. This happened to make a really big move really quick. And so on this Friday, it did get up to like 15.4, but we never closed the day above 16, so I was fine. Covered calls, in my opinion, are kind of the least on like the priority ladder. You really want to be able to actively trade the shares rather than have to worry about multiple things. But I did want to touch upon that before I hopped off here today because it is a tool and we will be using it in the future, for those in the Discord. Um, excuse me. And again, there is a time and place to use it. It's more so a tool to use when you're not thinking it's going to make a big move during a certain time. Again, I thought it was very safe, me thinking it wouldn't make this big of a move this quick. Again, it moved about 55% in a couple days, so I was sweating a little bit there. But again, worst case scenario, I sold it at 16. And again, you're not going to be doing covered calls on every single position. One, because there's a time and place for it. And two, you need 100 shares. Why? Because owning a call is basically the equivalent of having the rights to 100 shares, right? I don't want to get into that detailed stuff right now because we're kind of wrapping up here, but I did want to talk about that before we wrapped up here. So just kind of summarizing all of the concepts here, right? We wanted to talk about how to actually define our plan, go into trades not you kind of like, oh, I enter here and whatever happens, happens. The next thing you know, 3 months down the road, you're down 40%. Have a defined plan, whatever that plan is, have it, right? We gave you all the criteria. Let the higher time frames guide you. Long the strong and stay away from the weak. We don't want to worry about the weak names, right? Leave those alone. Let those prove themselves like Alibaba did, and then that's when the big explosive moves happen, right? Open your horizon. Don't think so big picture and long time horizon. Allow yourselves to be more flexible. Don't say I'm only going to buy a certain stock at this price, and then if it doesn't get there, I'll never touch it again. Be flexible. Look to actively trade. And there's also no problem taking a loss on stock equity, right? That's what we're going to kind of do as active swing traders. And then most importantly, right? Most importantly, do not settle for anything less than A plus. Again, whatever that may be, whether it's fully my system, fully your system, some type of combination of, a mix of them. Do not cheat yourself. Do not cheat all the time and effort that you put into the market and learning, and only, take the top A plus setups, right?
All right.
That's pretty much it.
Man, Zach, everybody, hold up 1 second. I'm gonna get my camera out, but drop some dubs in the chat if you love tonight. If you found value in what Zach just dropped tonight, drop some dubs in there. Look at
Appreciate
that.
it, guys. Really appreciate it.
No, we appreciate you, Zach. That was really good stuff, man. So I got some stuff to talk about still. We talked about earlier, we got some things that we want to announce. We got the giveaway coming up. We got some um special announcements and all that kind of fun stuff. So I'm gonna give a quick 5-minute warning to jump in the giveaway chat or form right now. Um I just put it in the chat again. Click that link. If you guys are not on that, you will not be part of the giveaway. We're going to give a few minutes more for people to get on that form, and then Bilal is going to turn it off and pull the names for me. We'll do the giveaway. But before we do that, I just want a couple of things to talk about. The first thing that I want to talk about is a new offer that we're going to give. We've never done this before. Uh, no, it's not Mastermind 2.0, which maybe a lot of people are thinking or maybe hoping for. However, it's the next best thing. Which if you've been really dying to get into Zach's Mastermind and you didn't get a chance to get into 1.0, we are going to sell for the first time the recordings of Mastermind 1.0. So you guys can purchase those tonight. We're gonna make them available for sale, and we're gonna talk about them, in the Discord and stuff like that, tomorrow and all that kind of fun stuff. However, tonight only, there's gonna be a discount for the people who want to grab those. So, what that's gonna look like is, we're going to. Sorry, I'm just getting the little message ready to put it in the chat. You have a couple options here. So, you can buy the entire mastermind recording. The recordings are going to be a little bit more expensive than the masterminds if you buy all of it normally, because we want the live masterminds to still be the goal. Okay, we really would rather people buy these, and join the live classes, do the live masterminds. We will do another mastermind down the road. Who know? We don't know when Zach's going to do 2.0, but it's going to be a while. So if you want to wait for 2.0, you're more than welcome to do that. However, if you want to get in there now and start learning the system and all that kind of stuff that Zach is teaching, you can do that. I just popped it in the group or in the chat. We are breaking it into three different packages, right? The first package is if you want only his futures strategies and his futures content. So if you're not interested in options, you just want to learn Zach's futures styles and stuff, you can do that for cheaper than the entire package. Same thing for just options. If you want just options, you can get that for cheaper than the full package. You can see the links in there in the chat. And then the normal full package, where if you want everything, which is, all of the recordings for everything, it's going to normally be $24.97, but tonight only until midnight, it's going to be $19.97. So, and that's $1,997, not $19. So I know somebody's going to ask. But you guys can get that for the same price tonight as a normal mastermind would be. If that's something that you guys want, you'll have lifetime access to those mastermind recordings. It's every class, we trimmed all the, the side conversations and stuff out of there and made it just the actual meat and potatoes, the questions and answers and all that kind of stuff. But those are the links to purchase. Those are going to be in the chat here. Now, I'm not going to talk a lot about that because this is a stocks webinar, right? Those of you who joined tonight are primarily interested in stocks, and the mastermind was options and futures. Like Zach said earlier, the this stuff that he talked about tonight wasn't even necessarily included in Mastermind 1.0. Maybe it'll be included in 2.0, but that's, for down the road. But the other exciting thing, and I'm gonna let Zach talk a little bit more about this, that is stock related and shares related, is a little small account challenge, we'll call it, that Zach's going to be starting on July 7th. So while we wait for people to finish up getting on the giveaway recording, or the giveaway form, and while we, let people decide if they want to invest in the mastermind recordings, Zach, take a minute, talk about the small account challenge that you're going to be running, what that looks like. I'm personally going to follow it myself. I'm putting 10K in an account and I'm going to follow along, because I have a lot of faith in Zach. So, but Zach, go ahead and talk about that.
For sure. And I appreciate the kind words, Deacon. And one thing I want to say before I talk about the small account challenge really quickly is what DJ said is not like a marketing ploy. I told him from day one, whenever the next mastermind would be, I don't know when it would be, 2 months, 6 months, a year plus, right? I told him that I just wanted to make sure that my class, every person who was active in there would feel comfortable enough. I wanted to make sure I left that class knowing that I did everything I could and everyone feels comfortable enough without me, right? The expression that I used when I started is that when you first learn to ride a bike, someone is there to kind of help you out. And then even when you take the training wheels off, someone's still there to guide you until eventually you're good to ride on your own. That's kind of, how I envisioned it and how I will envision it. So again, I don't know when that'll be. Some people have asked me privately. I truthfully don't know, and that's not a priority right now. But as far as the small account challenge, right, I'm very excited for this. It's going to be shares only. And again, basically everything that I just taught you, but I guess a little bit more detailed, we're going to have in a separate account. As EJ said, we're starting July 7th, and it's going to be every detail that you need, right? I'm going to show you the chart, which gives you the thesis. I'm going to show you the entry. I'm going to tell you how much percentage of the account. I'll give you the targets. I'll give you the exits. We kind of messed around with it a little bit the last couple months here. I was kind of throwing in the equity plays alongside the options plays, but now it's gonna be a lot cleaner. And I will say that we were gonna start it with a certain amount, but I really wanted to make this about percentage and just kind of show you guys, hey, it doesn't matter if you start with $1,000, $5,000, $100,000. It's all based off of percentages, right? To get your mind stopped to think, get your mind out of the dollar kind of thoughts. Get your mind just thinking in percentages, right? And so that's gonna be the beautiful thing about this challenge is it quite literally does not matter how much money you start with, right? The challenge is not for dollar growth. The challenge is for percentage growth, right? And so for example, if I say you're going to enter 10% of the account for someone with $1,000, that's $100, right? For someone with $100,000, it's 10,000. And it does not matter because the same percentage gain will be equal for the most part across the board, right? So I'm super excited for that. And again, there will be a time and place where I'm going to enter just options. There'll be a time where I'll maybe do options and shares or just shares in here. The one thing I will tell everybody, and I already wrote this, so once you guys see in the channel, that don't try to turn a shares play into an options play or vice versa, right? I do everything for a reason, and there will be times where I do both. But like, as I've given you plenty of examples during this webinar, there will be a time and place where it's only going to be shares. I don't really have a goal in mind, but just kind of messing around with a little bit more aggressive sizing. In like a month and a half, I made about 45 to 50% of my portfolio, just trading shares. It was a little bit more aggressive of sizing, but all these basic concepts. So the idea is if I can do 45, 50% gain with aggressive sizing, if I tone it down a bit over the course of a year, it could be something pretty special. So definitely pretty excited for that. Like I said, I'm going to talk about the trades beforehand, during, and after, whether it's a win or a lose. And so, most importantly, hopefully, regardless, right, which is obviously what we do every single day, normally with options, but you guys learn from the trade, right? Regardless if it was a winner, learn why it was a winner. If it was a loser, see what went wrong. And so, that's pretty much the gist. Pretty straightforward. It's really not going to require a lot of active management watching the charts for most people because for the most part, it's going to be, we're taking our one entry and looking for either an exit or a stop loss or some